But let me just go across to Maithili Busumat, consulting editor ET now, who joins in, to highlight the macro trends and all that's happening in the markets from that perspective. Maithili, good to have you on the show. Firstly, I mean, after a while, I think I've noted that the currency is now making a dash for 67. It's still at 66.91, so I don't know whether it retraces from here, but there's a weakness coming in on the currency front. We'll talk about that in a bit. First, your opening view on the SBI merger with its subsidiaries. It's been the talk of the town for years now. Now, of course, it seems like this decision is moving towards reality.
Well, Tanvi, I share entirely Dr. C.K. Narayan's skepticism because, frankly, the merger is not going to solve anything at all. The savings that the State Bank could effect, in fact, are so marginal as to not even be worth talking about. Because if, in fact, it was such a great idea, then why didn't State Bank of India continue with the merger? Because they had merged two of their associate banks in 2008 and 2010. They clearly didn't see too much of benefit from it, which is why they kind of opted not to merge any further. So now, like a good public sector bank, you've been given your signal and a nod and a wink from the finance ministry. The chairman is appointed by the government, so the government wants mergers to happen. So the State Bank of India is duly, doing what it has been asked, quote unquote, to do, and they're merging the banks along with Bharatiya Mahila Bank, which is always a bad idea to begin with. It was done by the previous UPA government with an eye on the elections. It made no difference whatsoever because when you lend to a borrower, you don't bother about the sex of the borrower. You're bothered about the viability of the project, whatever you're financing. So it is a bad idea to begin with. It will continue to be a bad idea, and merging it with SBI will not make a difference. So frankly, I think this is one of the political moves that the government has made, and like all good public sector banks, they have to kind of take their orders, quote unquote, again from the finance ministry. So frankly, I don't see any logic whatsoever for the merger. Having said that and being completely dismissive about the merger and sympathizing with public sector banks which have to act at the behest of the government, let me move on to the currency, Tanu, because that was your question really about today's macros. I'm, as you know, in the past, very happy to see the currency depreciate because the currency value of the currency today does not reflect the macroeconomic fundamentals. We've seen our export performance do miserably for 17 months. Month after month, and the fact is that it is from exports that jobs are going to be created. Most of our exports are in the labor intensive sectors, and somehow the government and the Reserve Bank of India have not woken up to the need to create employment in this country. It's all very well to talk of growth, but where are the jobs going to come from? And until such time as the Reserve Bank does not pay heed to the fact that an overvalued currency does not do anybody any good, I think we are going to see this kind of problem in the country of jobless growth. So I, for one, am very happy to see the currency depreciate, but I don't know whether Mr. Pandya shares that view. Mr. Pandya, do you share my view that a weakening currency in our kind of situation is not bad news at all? In fact, it is pretty good news.
Yes, I do pretty much agree with what you are saying in the context that given our current conditions, a slightly weaker currency is not hurting our prospects. When I was here on the last show, I had mentioned that the currency is expected to weaken somewhat, but it won't be a drastic all-out slide. That has pretty much come to pass in the sense that we are dwindling down towards 67, and we will in all possibilities breach that and stay there for a while. But on the downside, it's not going to be a rout. I don't really subscribe to the perception that we will slide all the way back to 70 or more than that and stay there. Having said that, as you were correctly mentioning, a weaker currency is not really hurting our prospects given the fact that there is a global commodity slowdown pretty much in place. Crude oil has been inching up, but it is comfortably below the projections which have been made by our budget estimates. So in that context, we are not hurt too badly as it is. Yes, you have encapsulated it well. The export-led growth needs to be put in place, and a weaker currency helps our exporters in spades. So yes, a slightly weaker currency on a continuing basis is not going to hurt our prospects given our domestic condition and the global environment which is currently in place. So yeah, a slightly more depreciated rupee will serve our purpose as well. Let me put it that way. So why not?
But Mr. Pandya, I think in September, we have those huge FCNR-B redemptions that are due. Normally in the past we've seen that there is a fair amount of rollover. One can't be sure this time, particularly the Fed hikes its interest rates. Is the RBI adequately prepared to meet those kind of outflows, and what are the kind of defenses it can build if the rupee is depreciating? Because given our narrow forex markets, it's very often it becomes a slow slide, becomes a deluge. So what are the defenses the RBI can adopt to prevent that from becoming a deluge?
Firstly, I think RBI is pretty conscious of these numbers which you have been speaking of regarding the FCNR repayment piece and the possibility of a Fed hike impeding an efficient or at least a cheap rollover. The governor has gone on record to say that there are ample reserves that have been built up, and I believe that it is possible for RBI to commit at least $15 billion, if not more, in the defense of the currency. Given the fact, as I mentioned earlier, that the global commodities environment is pretty weak, the import cover, as it were, is actually standing at record highs. So that frees RBI's hand to commit that much more resource to defending the currency if it comes to that. So I am not really so perturbed with the notion that the currency will depreciate, and as you the way you put it, that it'll turn into a deluge or a rout. I don't really see that coming to pass. Given the, as you mentioned, given the narrowness of the market, as you know, I hope that as and when RBI comes in to intervene, that itself will provide to be a strong deterrent to speculators who would like to kind of build the froth and take advantage of a particular direction our currency is taking. So I am not so confident, or I am not so worried that the rupee is headed for a headlong slide. And I do believe that RBI has enough provisions to tackle the eventuality if and when it happens.
And the combination of a weakening rupee with a rise in oil prices, does that worry you as far as the impact on inflation is concerned at a time when we are seeing inflation slowly edge up? Will this combination prove to be a double whammy?
The oil, as I mentioned, the oil prices have been moving up, but they remain comfortably within the budgetary projections that we have made. We also must keep in mind that it is not exactly the Brent number which is going to dictate the impact on our import bill, but it's our basket, which usually tends to be significantly cheaper than what the Brent prices rule. Having said that, I think a little attention ought to be paid or will be paid to how the monsoons are going to pan out. The impact, the direct and secondary impact which the monsoons will have on food inflation and therefore on CPI will be considerably more than what crude prices will have. So yes, crude is a concern, particularly in the context of the fact that we don't really have any control over how the crude prices move. We are price takers in that field. So we will need to see where the prices kind of end up. A worrying situation will happen if the prices edge beyond the calculations which we have in place for our budgetary estimates, and more importantly, they stay above those estimates. And that is when we will kind of have to worry about the impact which it will have on the inflation. The direction and the speed with which the crude will move is anybody's guess. Of course, there is no gainsaying that if crude does go past our tolerance levels and remains there, there will be an impact on inflation, and we'll have to tackle it at that point in time. But given the current situation which we are in, the current global environment, especially in the context of the demand situations in the various economies which tend to be large consumers of crude, it does not seem likely that the crude prices are going to move up beyond $60 and kind of stay there, which is pretty much our tolerance level.
All right, Killol as well as Michael, thanks very much for giving us your insight and your perspective on the macro trends as is and whether the currency can weaken further from here. 66.90, this is the weakest the currency has got in a while. In fact, I think in a month or so. and of course nudging towards 67. So let's see whether it can actually breach past that mark.